Datavault AI Inc. NASDAQ DVLT. Current price $1.44 USD. Market movement minus 6.50% intraday. Volatility alert high. Right now, as we watch the ticker tape scroll across the screen, Datavault AI Inc., trading under the symbol DVLT, is hovering right around the $1.44 mark. The market is currently open and active, and what we are seeing is a fascinating, if somewhat jagged, intraday performance. While you might have seen it flash green earlier in the pre-market or at the opening bell, perhaps touching that $1.45 or $1.48 level, the reality of the live session is pushing back with a decline of roughly 6.5% at this specific moment. This kind of whiplash, where a stock gaps up only to face immediate selling pressure or conversely flushes down only to be bought up by retail enthusiasts, is exactly the kind of price action that defines the current microcap landscape. It is not just a number on a screen. It is a live battle between the momentum traders who see a low float opportunity and the fundamental skeptics who are looking at the balance sheet. This brings us directly to the tension between expectation and reality, which is the single most important lens through which we must view this company. The expectation, the narrative that likely brought you to this video or caused you to look up the ticker, is right there in the name, Datavault AI. When investors see AI appended to a company title in the current market climate, the immediate assumption is that we are looking at a direct competitor to the heavyweights, perhaps a hidden gem that is building the next large language model, or a proprietary neural network that will rival the infrastructure powering NVIDIA stock. You expect a software-first, high-margin business that is capitalizing on the generative intelligence boom. The reality, however, is far more complex and, frankly, much more interesting. Datavault AI is not a traditional artificial intelligence startup birthed in a Silicon Valley garage. Until quite recently, this company was known as WISA Technologies, a firm focused on high-definition wireless audio standards. The pivot to Datavault AI is a massive strategic shift. Some might call it a complete reinvention that aims to monetize data and use blockchain technology, specifically through a connection to holding companies and meme coin dividends. Yes, you heard that correctly. The reality here is not just about machine learning, it is about a financial engineering experiment involving meme coins as dividends. This creates a disconnect that you need to understand. You are not just buying a tech stock, you are buying into a holding company that is leveraging the psychology of the modern retail trader, the kind who might use the Robinhood app or SoFi Invest to chase viral trends, rather than just purely analyzing cash flow statements. Let's look closer at the immediate trading behavior we are seeing today. The drop to $1.44 suggests that while the news cycle is churning out headlines, the market is struggling to find a stable floor. Volume is key here. If you pull up your Interactive Brokers trading terminal or check the volume bars on your Fidelity mobile app, you will likely see spikes that do not correlate perfectly with the broader index. This indicates that DVLT is trading on its own idiosyncratic news, specifically related to its recent announcements about the Dream Bowl meme coin distribution. When a company announces it is giving away a crypto token to shareholders, it attracts a very specific type of liquidity. It brings in the speculators, the arbitrageurs, and the curious. This creates a sell the news dynamic. The expectation was that the announcement would send the stock to the moon. The reality is that many traders bought the rumor last week and are now offloading their positions to lock in quick gains, creating this downward pressure we see right now at the $1.44 level. To understand why this is happening, we have to talk about the broader environment of online investing. In the past, if you wanted to analyze a stock, you waited for the quarterly report, mailed in your proxy vote, and maybe called your broker at Fidelity Investments. Today, the speed of information is instantaneous. Platforms like Webull or Robinhood stock trading interfaces allow for instant reaction to press releases. Datavault AI is playing directly into this ecosystem. They recently announced that the board set a distribution date for a meme coin to eligible shareholders. This is a tactic we rarely see from blue-chip giants. You would never see Apple stock or Tesla stock issuing a Doge derivative as a dividend to loyal holders. They reward you with buybacks or cash dividends. Datavault is doing something different. They are trying to weaponize attention. By distributing a token, they are hoping to create a secondary market of value and engagement that keeps the stock ticker trending on social media. It's a high-risk, high-reward marketing strategy disguised as a corporate action. Now, I want you to pause and engage with this idea for a second. It's a wild concept, receiving a meme coin just for holding a NASDAQ-listed stock. Comment below. If you hold DVLT, are you doing it for the potential long-term AI growth, or are you just here to get the free meme coins? Be honest. I want to see how many of you are treating this like a serious investment versus a lottery ticket. Moving back to the analysis, we need to address the AI component of the name, because that's where the valuation multiple comes from. If this were still just WISA Technologies selling wireless audio modules, the market cap and interest would likely be lower. By rebranding to Datavault AI, the company is signaling a move to data monetization. They are acquiring assets, like the revenue streams from media or data companies, and trying to optimize them. For example, they have reported massive revenue growth figures recently, something in the range of 400% year over year. That sounds incredible on paper. Expectation, the business is exploding. Reality, this growth is largely inorganic, driven by acquisitions, like the purchase of assets or companies that already had revenue. It's not necessarily that they sold 400% more audio chips, it's that they bought a revenue stream and added it to their books. This is a classic roll-up strategy, where a company grows by buying other smaller companies. It's a legitimate strategy. Many great conglomerates started this way, but it comes with the risk of integration headaches and debt. For the individual brokerage account holder, this distinction is vital. When you see revenue up 400%, you might rush to buy on your SoFi trading platform, but a seasoned analyst at Fidelity Wealth Management would ask, at what cost was that revenue acquired? The company has faced significant losses in the past, and despite the top-line growth, the bottom line, net income, often tells a story of high cash burn. The going concern warnings that have appeared in previous filings are a standard red flag that auditors use when a company is burning cash faster than it is bringing it in. This doesn't mean the company is doomed. Many high-growth tech stocks burn cash for years, but it does mean that the risk of dilution is high. Dilution is when the company sells more shares to raise cash, which makes your existing shares worth less. We have seen this happen with countless microcaps. They spike on news, raising money from eager retail investors, and then the price slowly bleeds out as the share count swells. Let's contextualize this with the current sector momentum. We are in a market where AI is the rising tide lifting all boats. NVIDIA has set the tempo, creating a massive appetite for anything related to data centers, chips, or proprietary algorithms. Datavault is trying to draft behind this massive semi-truck of market interest. However, unlike the big players who have billions in free cash flow, Datavault is in the prove-it phase. They have to prove that their data platform, which involves the information data exchange, can actually generate high-margin recurring revenue. The idea is to allow companies to value and monetize their data assets. In theory, this is brilliant. Data is the new oil, as the saying goes. If Datavault can become the marketplace where companies trade and value their data, the upside is astronomical. But in practice, building a two-sided marketplace is incredibly difficult. It requires massive trust and volume. We also have to consider the technicals on the chart. If you look at the daily time frame on Schwab Intelligent Portfolios or Interactive Brokers, you will see that DVLT has been in a downtrend for a significant period before recent spikes. The stock has resistance around the $1.50 and $1.60 levels. Every time it tries to break above these points, sellers step in. This $1.44 level we are seeing today is a battleground. Support lies historically lower, around the $1.20 or $1.30 mark. If the meme coin hype fades and the price breaks below $1.30, we could see a retest of the lows. Conversely, if the retail army from Robinhood crypto circles gets excited about the distribution date approaching in late December, we could see a gamma squeeze type of move, where buying begets more buying, pushing the stock past $1.60 and forcing shorts to cover. It's also worth mentioning the partnership with Silex Holding Company. The fact that Datavault is distributing tokens to Silex holders as well creates a cross-pollination of investor bases. This is a very clever, if unorthodox, move. It means they are tapping into another company's shareholder base, effectively marketing DVLT to thousands of new